to the Idaho Water Resources Research Institute seminar series. This is one that we do jointly every month with the Idaho American Water Resources Association group. So we should have a big group here today, which is great. Today I'll just introduce Will Duggins, who's a geologist and GIS expert, serves as the Westervelt Ecological Services Rocky Mountain Region Operations Manager. Basically works in land acquisition, contracting, site due diligence, and constructed development feasibility in the region, and basically implements and manages projects across Idaho, Montana, North Dakota, South Dakota, Nebraska, and Colorado. So without further ado, I'll go ahead and turn it over to Will. And again, typical format here, feel free to drop questions into the chat, and then we'll also be soliciting questions via the audio, probably here about 40 minutes in. All right, thanks everybody for coming today, and go ahead, Will.
Thanks, Tim. Thanks for the intro. Hey, everyone. Thanks for joining today. I'm excited to talk to you all about wetland mitigation banking and kind of, walk you all through the area of work that I kind of live in and am passionate about. And I'm going to go ahead and share, and we will get going on this thing. Okay. So as Tim mentioned, my name is Will Duggins, so I work with Westervelt Ecological Services. I've been there about 4 years now. Prior to that, I was a geologist in upstream oil and gas. And this is kind of, this is really my introductory, I guess, career path into the environmental world. But compensatory mitigation kind of straddles this interesting place where it's very pragmatic and on the ground. It is capital intensive. It's not cheap. And it really kind of strikes this interesting balance, I would say, between environment, ecology, development, and, putting things on the ground in the real world. That is just a lot of fun. And so I'm excited to talk to you all about that today. This is our kind of company footprint, and I think it kind of tells a story a bit about the types of projects that we're interested in putting on the ground and where those actually exist. So the Westervelt company and the Westervelt Ecological Services subsidiary that I work for was founded down in the Southeast, and as you can see there's a ton of projects that we have kind of throughout the Gulf states. A lot of these are wetland and stream mitigation projects. And then we also have a series of projects out in California. Those are actually more species and conservation banks. Our Rockies region where I work is a little more fledgling, and we just started this region back in 2018. We had a couple of mitigation banks here in Colorado, and more recently, we've really branched out to a lot of other states. And the projects that we put on the ground are both mitigation banks, in lieu fee programs, and then also assisting clients with permitting responsible mitigation. I'll go through kind of the nuance between those things. But if you all have any questions while I'm going or something doesn't make sense, please either feel free to speak up and take yourself off mute or drop something in the chat, as Tim mentioned. Okay, so let's kind of just get into this and start with a few definitions here to kind of set the stage as to what we're talking about today. So most people have probably heard the word mitigation. Maybe you've seen like a fire mitigation commercial, right? Like someone has a home fire and they need to mitigate some of their losses. And mitigation really in its essence means kind of offsetting some sort of negative impact as best you can. And so compensatory mitigation and what we're going to talk about today is typically mitigation to minimize impacts to either streams or wetlands or sensitive habitats that maybe endangered species or threatened species live in. This concept has been around for a pretty long time, and compensatory mitigation in the form of mitigation banks and in lieu fee programs and permitting responsible mitigation has been really put on the ground since probably the early 90s. But the success of those projects early on kind of came into question. Some of the projects were failing. They weren't necessarily doing what they sought to do. And there were a lot of questions from the regulators as to, we're requiring these entities to compensate for their impacts, but we don't really have any measurables. We don't have any way to say, like, this is a successful site, this is a poor site, this is a good form of mitigation, this is a bad form of mitigation. And so back in 1999, the EPA and the U.S. Army Corps, who are really kind of the key regulatory entities when it comes to 404 wetland protections and stream protections, they got together and they asked the National Research Council to evaluate the effectiveness of compensatory mitigation. And so the National Research Council did a bunch of studies. They published a study in 2001 and then kind of iterated on it over time and finally released the 2008 mitigation rule. So this is about a decade-long process of including the public, including experts, looking at all this research data. And they put forth the 2008 mitigation rule, which really defines our industry as it sits today. And the key aspects of the rule, it's actually very easy to read. If anyone is interested in policy and is interested in wetlands, I would highly encourage you to go out and read this rule. It will take you maybe an hour and a half or so to get through the whole thing, to get through the rule itself. And then there's a bunch of question and answer at the end, which is actually really interesting because you hear experts kind of asking these questions and then the folks who wrote the rule responding to those various questions and kind of stating what they've put in the rule and why. But the key points to the '08 mitigation rule are kind of twofold. There are two hierarchies that are established, and these kind of govern the way that wetland and stream mitigation work in the U.S. First, there's the impact hierarchy. So if you are an entity, let's say you're a DOT, so a Department of Transportation, and you are going to widen a road, which is fairly typical, right? Like roads typically don't shrink in the US, they almost always widen. And so DOTs are almost always widening these roads. And they have to say to the Army Corps, listen, we're going to widen this road and it's going to impact some sort of regulated area, whether it's a wetland or a stream. The Army Corps, who's kind of governing that wetland and stream on the regulatory side, may say, okay, that's fine. You want to widen the road. We can respect that. We understand you need to widen the road, but we want you to go through these 3 steps. If you can orient the road around a wetland or a stream, we really want you to do that. And if you can't do that, we want you to minimize your impacts to that wetland or stream. And whatever you can't minimize, we understand you might not be able to minimize everything. We need you to mitigate that. And so this is kind of where the mitigation actually comes in, right? So if an entity is unable to avoid and they're unable to minimize, and they finally get to the point where it's just no longer feasible to do anything else, they will go to the mitigation hierarchy. And the mitigation hierarchy is laid out as such. The mitigation bank is the preferred method of mitigation if it exists within the area that the impacts are occurring. The next level down, or the next idea that the Corps would like to approve, is the in lieu fee program. And like I said, I'll go through the definitions of these things in just a second. And then the third is a permittee responsible mitigation project. Okay, so let's define these things too before we get too much further. And I should have said from the outlay, I'm going to go through kind of these definitions, and then we're going to go through kind of a real world timeline of how a mitigation bank comes to fruition. I've tried to make it as linear as possible. It's not often a super linear process. A lot of stuff happens at the same time. But we'll go through this first, and then we'll get into that. Okay, so compensatory mitigation bank. So this is like entities like Westervelt. This is kind of our bread and butter, right? These are pretty large scale projects. They are typically land that a mitigation banker has either purchased or gone into a landowner partnership with someone. So a lot of times Westervelt will just go out and purchase the land. So we would purchase, typically it's ag land. So there's been some sort of conversion from, previous wetlands to agricultural or ranching land, right? So the wetlands have been drained. And so we go out and purchase the land. We entitle or permit the project develop the plan, and then we go out and actually execute the construction of the wetland project. On the right here is a picture of our Big Thompson Confluence Mitigation Bank. So you can see we excavated down, recreated some swales that would have historically been there, tried to make it look as natural as possible, and went in and planted this wetland vegetation. And so the compensatory mitigation bank is really a speculative instrument, right? It takes a large amount of capital. There are to execute, right? The land is not cheap, the restoration is not cheap, the management is not cheap. And then the speculative entity, or the speculative aspect, I should say, of it is that you're hoping that someone will come along and buy your credits from you, right? The output of this entire project is credits. And so when entities make impacts within the service area of the Big Thompson Confluence Mitigation Bank, our phone will ring and we will sell them credits to offset their impacts that they were unable to avoid or minimize. The good thing about a bank is a few things. So first of all, credits are key because credits completely sever the environmental liability that the impacting entity has. When they purchase the credits from us, that's it for them. They don't have to manage the project. They don't have to do anything out at Big Thompson. They just pay us and they get to walk away. And from the Army Corps' perspective, that's really great too, because they're able to issue a permit to that entity without too much trouble because they already have an approved mitigation bank in the area. They already have a solution sitting there for them to draw credits from. The compensatory mitigation bank does have a service area associated with it. So this bank, for example, serves kind of the Denver metro area. If you're familiar with that area in the Front Range, basically South Denver all the way up to Fort Collins. And that's kind of our service area. And we'll look at a service area in an example in just a little bit, but you can't just put a mitigation bank on the ground and then expect it to service someone's needs on the other side of the state. There has to be a service area which is negotiated with the Army Corps associated with that bank. Okay, next is an in lieu fee program. So this is a kind of a weird word, and it's not actually that weird in reality. So this is different from a mitigation bank in that typically the restoration occurs after the impacts. If you remember, the bank is speculative, so it's put on the ground, the capital is spent upfront to do the restoration effort prior to impacts, and then the credits are sold. This happens after the impacts, and usually in lieu fee programs are run by either a nonprofit or some sort of governmental entity. And so they don't have the money to go out and do the restoration prior. They have to gather the money and pool the money typically from various impacts in the area, and then they have to go out and execute the project. So you can see why this is automatically second in line, just in that sense, behind the mitigation bank from the Corps' perspective. It's because there's a temporal loss here of both wetlands and streams, and it's not really a guaranteed thing, right? The credits, when they're released at a bank, the only reason you were getting credits is because you've hit some sort of performance standards, right? And the credits are released preemptive. So there is an inherent risk on the side of the Army Corps in sending a client to purchase credits from an in lieu fee program because they're not yet on the ground. In lieu fee programs always have service areas with them as well. Typically, the service areas are quite large. It's not unusual for them to be quite large and cover a pretty vast geographic area. And then finally, the third type and the least preferred type of mitigation is permanently responsible mitigation. So this also happens after the fact, typically. In this case, there's not a third party responsible for the mitigation. In this case, the entity who's making the impacts is responsible for the mitigation, and the permit is tied to their mitigation, right? So what they do is they say, we're going to impact, 20 acres of wetlands along this roadway. We're going to put forth a plan to mitigate for that. and usually it'll be restoring 20 acres or more, typically more than 20 acres of wetlands. And that project is typically located closer to the impacts. And the Corps, the Army Corps is the reviewer in this case. They will review that and they will say, okay, this plan is either up to snuff or go back and try again and send us something better. In this case, there is less regulatory oversight, but if the project fails, the permittee is on the hook for its success. So if it does fail, and then let's say hypothetically a mitigation bank comes into the service area of this failed project, there's a pretty good chance the Army Corps could say to the permittee, listen, we know you've tried, but your project has not worked. You need to go over to the mitigation bank and buy credits. So now this entity, whoever it may be, is kind of in the red, right? Because they're paying double for the mitigation, which no one wants to do. Any questions to this point before I get into kind of timeline and going through just some real world kind of implementation? Nothing yet? Okay. So timeline. So this is kind of a faux timeline for the development of a mitigation bank. And you can see it's fairly long. This goes from 2022 to 2042. So that's 20 years, which is, I would call a long project. The initial portion of the project is not that long between, site evaluation and bank development and approval. But then when it comes to actual like putting the project on the ground, selling the credits, and ensuring performance, it can often be a fairly long time. So I'm going to try and walk through, as I mentioned, kind of as linear as possible here. A lot of times, multiple things in this process are happening at once. But my hope is that you will at least take away from this that this is a very complex business. And it just requires kind of a breadth of expertise. I think on the team's part, we need people who are business savvy and financially savvy. We need people who are experts in ecology and botany, and we need experts in land management and construction. So it's a pretty wide-ranging group that we typically have on our teams. So if we begin kind of with the end in mind, this is really the thing we're striving to do on the first tranche of a project, is develop a bank document that is agreed to by both ourselves and by the Army Corps and by what's called the IRT. It's the interagency review team. And typically the interagency review team is composed of the EPA, the Army Corps, Fish and Wildlife Service, the state wildlife regulatory agency, and often the state water agency, so the state engineer's office for water, especially in the western states. The bank document, though, is really a contract, and it's a contract between the banker, so Westervelt Ecological Services in this case. There's other bankers that are out there, but them and this IRT. And it lays out kind of how is this thing going to work? How's it going to be established? How's it going to be implemented? What's going to happen if we don't do what we say we're going to do? The Army Corps and the IRT can terminate the bank. And then talking through various risks and addressing various challenges that may occur within the development of the site. And that comes down back to Westervelt or the banker saying to the IRT, listen, like, this is a complex site for X, Y, and Z reasons. Some of this might not work. And if it doesn't, please don't be too mad at us. We are going to try. But if you need to withhold some credits, then that's going to just be the outcome. Okay, so it's kind of being transparent, understanding the contract, putting a contract that is legible to everyone, and also then finally supporting both what we think is going to happen and what we actually track happening with various technical documents along the way, and stating the required technical documents. The first kind of step in this whole process is development of the prospectus. And the prospectus is the chance. This is kind of like when you write a report, a lot of times you'll write like the abstract at the end, right? Because the abstract really summarizes your report. This is a little backwards from that. This is This is you're writing kind of the abstract for what you think is going to happen, and you don't really know what's going to happen, but you think it's going to happen in the prospectus. And it's your chance to really tell a story and get the regulators excited about your project. Why does this matter? Why do wetlands in this area that have no wetlands now because they've all been drained over the past 100 years and turned into farmland? Why does that matter? Why is that important for overall biological resources? Why is that important for the community? Right? Like these are things that people are going to look at. This is a large scale restoration area that people are going to look at. They're not going to necessarily be able to use it, but it does have aesthetic value for areas that are just, in the middle of Nebraska, for example, for lack of a better example, it's just a lot of farmland, right? And then all of a sudden, smack dab in the middle of that, you have a large restoration area. So why is that important? And kind of telling that story to folks and getting them excited and bought in. A key portion of this um, is setting the stage with the service area. And this is the business sense that comes into this thing. So this is the map on the right, I think, is a fairly decent example. What we have there are a bunch of hydrologic units. And so the smaller kind of like light blue lines, those are Huck 8s, so hydrologic unit code 8. The larger dark blue line is a Huck 6, and this is in western Idaho near our Sucker Creek Bank, which is over in Homedale, Idaho, if you all are familiar with the area. Um, and then in the orange is kind of our proposed service area, right? And so there is a lot of thought that goes into the service area because the service area defines where you can sell credits. So if we put a bank down in the very southwestern corner of this map in the middle of Wahi, uh, Huck 8, and it didn't service Boise or Caldwell, where all of the development is kind of happening in that valley, that would not probably be the best business decision for us because ultimately to make these projects pencil, we have to put a project in an area where we are going to end up selling credits. Okay, so where development is inherently going to happen. And the upside is that we get to offset the development. The downside is that the development's going to happen. So that's kind of this weird line that we straddle, as I kind of mentioned earlier. Um, Ecoregions also play a large part here. So ecoregions are defined by the EPA, and ecoregions are fairly key to kind of different environments, right? So different temporal environments. So the orange here is cut at the Snake River ecoregion, right? So it's a unique ecoregion within Idaho. And so this is kind of part of a negotiation that we go through with the Corps and the EPA. And various political boundaries are incorporated as well. Just to back up, the ecoregions also heavily influence the presence of various different types of species, just because of the ecology of the region. And then the political boundaries are present as well. So typically we clip at a state line. But you can have a bank that straddles two different states, but you get two different regulatory entities involved. You get the Army Corps from, in this case, it would be Idaho, and then the Army Corps from Oregon. It's just more people in the room, and it makes it much more complex to execute. So typically, we will cut at a state boundary. So all of this has to actually be executed in the real world, right? It's not just a plan. So we need to actually have land here. And the land is typically one of the more complex portions of the project. It's certainly one of the top three. Land in the Western US is supremely difficult because oftentimes it's severed. So a lot of times people may own the surface, they may not own the minerals. That's very common in the Western US, pretty much everywhere west of Nebraska, like Western Nebraska. We will run into stuff where you have minerals severed from title and severed from surface. So understanding that, understanding, who is the actual landowner? Is Bob actually the landowner? He says he is, but then when you go look at the title, Well, it's actually Bob, but then his nieces have like 5/8 of the title. So it can become very complicated very quickly with title. And so ensuring that you have clean and clear title is key and paramount to executing these projects. Um, we typically can't, on our project sites, we typically can't have liens. So the project needs to be owned in whole by Westervelt, which means the person we purchase it from needs to own it in whole, right? Because in the case of Bob, if he only owns, 3/8 of the title and his nieces own 5/8 of the title, well, Bob doesn't own all of it. So if you just paid Bob a bunch of money, you're kind of up a creek because you need to go to the nieces and buy the rest of their portion out. Um, and then very common in the Western US are various leases, right? You may have oil and gas leases. You may have timber or wind leases. You may have right of ways, right? You may have a pipeline crossing your project, or you may have a utility right of way that gives a power company the option to put power lines on your property. So these are all things that kind of come up as you get into the title and dig into the title. And is kind of a key component of the purchase process. And the whole reason for that really is kind of the last bullet on here. In order for us to put a project on the ground that is going to be in perpetuity and is going to be a wetland restoration project or stream or species project, we have to be able to put a conservation easement on it. And a conservation easement precludes any sort of development on that piece of land, right? You're not going to build a target there anymore. And so to put the conservation easement on there and have it hold up, you need to make sure that there's nothing in the title along the way stating that there's some other land use prescribed for that piece of land. So as we move along, the way that we typically do this is we will have the prospectus in, we would have a contract with a landowner to purchase the land, so a purchase and sale agreement. And then concurrently with that, as the purchase and sale agreement is going, we may give ourselves 180 days, for example, to do due diligence on the property, make sure the title is clear, go out, drill some groundwater wells, go out, do a wetland delineation, do a species survey, do a vegetation survey. As all of that is happening, concurrently, a bank development plan is being put together. And this is really the report version of the prospectus, right? If the prospectus is the abstract, this is the actual report. And so this is basically stating this is what we're going to do. Here's how we're going to do it. We send that to the Army Corps, and then we start to execute. We start to execute this business development plan or the bank development plan. And in the bank development plan, we provide very clear goals as to what type of restoration we're going to do. We state that, or we design the project so it's going to be self-sustaining so that it doesn't have to be some engineered project that requires someone to come out and pull boards out of an irrigation ditch. It needs to work on its own without human interference and without humans helping it along. We can help it in the interim, so like right after construction, right, with watering and so on and so forth. But over time, it needs to work on its own. And so that's the bank development plan that is actually kind of the big document that we're working towards concurrently with these other things. The other thing that we're working on is taking a look at the land and understanding what are the risks here and what is going to work for this piece of land. What does it need? Are there weeds everywhere on this piece of land right now? Are there invasive species everywhere on this piece of land right now? Well, they're probably going to try and come back, right? Just because you do a big excavation and reseed with native vegetation doesn't mean they're not going to come back. You're going to get a bunch of Russian olives. If they were there, they're going to try and come back. So understanding what the project and what the site is going to need to succeed, and then focusing also on adaptive management, right? If climate change is real, which I think it probably is, we probably need to build in some adaptive management for what if there is drought? What if there is a prolonged drought? Are we able to irrigate this thing? What if there's a fire? Are we able to go out and reseed it? so kind of focusing on these things that, what if there's a huge flood, right? Focusing on these things that are a little bit black swan events. If these things happen, please, Army Corps, let us go out and fix the issue here, so that we don't have a failing site after some kind of unforeseen catastrophic event. We want to go out and maintain the site and do something to actually fix what actually just went wrong. And as part of this bank development plan, then we get into the finances, right? And so I'm sure this table is probably making your all's eyes cross. It's making my eyes cross as well. But I think it's important to highlight kind of how we carve up our various costs. And this is not industry specific. This is fairly like accounting specific. But we kind of have our initial costs, which we call CapEx, so capital expenditure. That would include just one-time costs, right? Like, so buying land. In this case, we paid $7.75 million for a piece of land. That is not an abnormal number of dollars that we would pay for a piece of land, just to let you guys know how expensive this actually can be. Um, Entitlement and permitting. So on the second line, that is something that's just straddling 2 years. So you're paying $250,000 once, but it's just spread out over a 2 year period, so on and so forth, all the way down. And then construction, right? That's going to be a one-time cost. Hopefully, you only have to go out and build the thing once. Then there's interim costs. So that is like right after construction, what do you need to do? Do you need to go irrigate for a little bit? Do you need to plan on reseeding? Do you need to provide herbicide management, right, to prevent noxious species from cropping back up? That's kind of interim management. And then there's long-term management costs. And these go on for a very long time, right? These, as I mentioned, this is in perpetuity. This is a conservation easement, and the property is managed in perpetuity. So you have to maintain and manage this land in perpetuity. The hope is that nature takes its course in the way that you want it to, and you have a robust mitigation site that gets better over time, easier to manage, less weeds, right? And so your costs hopefully dwindle and go down over time. That is the hope. All of this stuff, all of these numbers are added up, and they're kind of parsed out into two buckets. One bucket in this interim and the CapEx stuff is stuff that those are costs that Westervelt pays out of pocket, right? So we pay for the land out of pocket. We pay for our legal expenses out of pocket. We pay for the construction out of pocket. The rest of the long-term stuff, though, all of that stuff 50, 100 years down the road is modeled and is put into an endowment. And that endowment is funded by Westervelt up front. And so Westervelt might put in this case, we put in $586,000, right? And that $586,000 sits there and gathers a 4.5% interest rate. And the idea is that you put enough in this pot with the contingency, and you have to pay the admins to do the thing, right? And to manage the money long term. But you put enough money in this pot that hopefully you're just living off the interest. Hopefully you're able to long term manage just off the interest, and everything is inflation adjusted. We put it in this complex spreadsheet that basically spits out a number at the end and says, this is how much you should need. And then we add the contingency to that. And that is a requirement of the mitigation bank. So that is one of the requirements that the Corps makes us do. Okay. Design. So stepping away from the financial stuff, design. This is kind of the more fun stuff to me. You have to realize there's kind of two people in the room here, and this is negotiation. There's the Army Corps and the EPA and the IRT, as I mentioned, kind of on the left side. And then there's the business perspective, right? The regulatory perspective kind of wants, they say, well, you put this in the plan. We need you to do this. We need you to prove your success. We need you to define all of these things and these references and make sure that all this stuff works. And then there's the execution side on the business side, which says the target is a challenge. We want some flexibility because we know nature is not going to go the way we think it will. We hope it will, but it never does. And then we also want to get all of our credits, right? Because we put up all of this money, and all of that money is modeled into X number of credits times Y amount of dollars per credit will give you Z amount of revenue, right? And so that's your kind of ultimate payout. And you need that ultimate payout to be higher than what you just put into this project in order to make it pencil financially. And then finally, with crediting, you want the credits to be available quickly so that you can actually sell them, right? So there's an inherent, I would say, back and forth here. It's not typically a bad relationship or anything like that between the two entities. They're just two different perspectives and two different entities working from different perspectives. So there can inherently be some conflict there. So our restoration design is really driven by what does the site want to be? What can the site be? Does the site need to be all PEM wetlands? Or is it actually better if it would be a forested wetland? Long term, maybe a forested wetland is going to require way less maintenance and monitoring than a PEM wetland because you just won't get the same amount of noxious weeds in that particular area, even though the credit release may be stretched out. These are some things that you have to consider when going into the restoration design is like, what do you actually want to create here? And there's various types of kind of alterations that we can do to the landscape. We can enhance existing wetlands and streams, right? Which is kind of a low touch approach. We can restore wetlands and streams that are no longer there, but we have maybe historical proof through aerial photos, or there's hydric soils in the area, but just no wetland veg. And so maybe the restoration is the way to go. Or you can create new wetlands, right? Oftentimes, depending on where you are, that can be a little bit of a losing battle, especially in the arid West, where if it's supposed to be self-sustaining and you're going to create it, is it going to work? Maybe, maybe not. And then your overall viability for success when thinking about your restoration goals is you ultimately need hydrology there. So you need water to be within typically a foot or so of the surface for a fairly extended period of time, usually at least a couple weeks during the growing season. You need soils to develop over time, and you need wetland veg more than anything to develop over time because the soils will come to you over time. The hydrology kind of needs to be there though, and the vegetation is like the clear demonstration of the site success to an observer, right? When the Army Corps comes out, walks around the site, if they see a lot of wetland veg around, cool, you've got a wetland, right, to the naked eye. Or at least it's moving in the right direction. If you have a bunch of upland plants and conifers and stuff growing, probably not a wetland, so it might not be working for you. And this is an example of just kind of how we gauge our success, right? So a lot of times within the mitigation bank document, we will put together a series of different matrices, right? And these matrices kind of show like how well is this performing? How do we gauge the site's performance? And these are all tailored to each and every site based on the type of vegetation that we expect to be there, based on the type of soils that we expect to be there, based on the type of, hydrology and water flow that we expect to be there. And so it's kind of a puzzle, right? It's you're examining a site and saying, we think it can be this, and then you're executing in the real world, and then you're hoping that your parameters that you put together as part of your restoration design function and values analysis match to that and provide a clear indication that your site and your restoration is moving in the correct direction over time. And a map, I love a map as much as the next person. So a map kind of tells you everything about a site just in a snapshot, right? So like this is our Snake River site. This is over near Idaho Falls, Idaho, and this is our 30% concept design. So as you can see down at the bottom, this is probably kind of small for you all, but the legend at the bottom, the blue is enhancement areas. So those will be fairly low touch and just basically taking care of noxious species and keeping weeds out of there. The darker orange is reestablishment. So that's reestablishing old relic wetlands that were there before the Snake River was dredged out and levied and was really kind of constrained to its current course. Um, Green is rehabilitation, so helping existing wetlands become significantly better than they currently are. And then the Corps also recognizes the need for upland buffer, right? They want a mosaic ecosystem here, and a mosaic includes upland areas for both ecological reasons and aesthetic reasons. You don't just want a pit of monolithic wetlands sitting there. You want a mosaic of different types of vegetation, and that helps with site establishment and site resilience over time. And then I think the final note on the design concept that I want to make is, this whole thing really comes down to a story. This is a story that you're telling to these entities who are regulating and approving your plan. And a picture's worth 1,000 words. And we have a great, illustration staff. And we have Danielle, she's like a scientific illustrator. So she draws those like amazing things that you would see in National Geographic and stuff like that. And, telling the story as to what a thing can be is hugely impactful though when people are looking at a landscape and they may just not have the vision or the mind's eye to be able to think of something like this. So putting something in front of them can go a really long way into showing that, hey, this is like where this thing can actually, what this can become over time. And then just a few kind of final points on the restoration design. What are the goals of your restoration? Don't make them too complex. Let's just keep it simple. It's already complex enough. What are the key goals here? What are you seeking to achieve? Find a reference, find a target, find something in the area that's working without you doing anything to it, right? Is there an existing wetland that you can go look at and see what's growing there? So you can source that vegetation because it clearly works in that climate and that hydrology. And then working with nature. So is there a clear path that water wants to work through on the site? It's going to end up there sooner or later. So go ahead and work with nature and don't overthink it and don't try and make a site do something that it doesn't inherently want to do. And finally, don't let perfect get in the way of the good. This is something that we kind of continually preach in our shop because everything is dynamic. It's going to look terrible at some point. You're going to hate the restoration project in the beginning because it will look awful. And then over time, if you tend it and if you manage it correctly, it will work out. And then some required reading that Tyler, who was going to give this presentation originally and was occupied with something else, so I filled in. She was like, make sure everyone has this slide. This is a hugely impactful book for most people in this industry. It is it's kind of the reference on how streams work, how water flows across the landscape, and how to implement projects that don't fight nature but that work with nature. And then I'm kind of getting to the end here, so just kind of wrapping up a few things. Uh, I think I can't reiterate this enough, and I think this is honestly like a point that uh, kind of goes above and beyond even this talk based on mitigation, right? You have to know your audience, right? Everyone knows that. You have to know your audience. That is like the key communication thing. Who are you talking to here? I'm going to talk to my buddy differently than my wife, I hope. So it's like, or my wife differently than my buddy. So you have to know your audience and you have to look at the agency. What is their perspective? What do they want, right? They want science-based. They want you to spend the money up front to give them science and data. They want to see that you installed groundwater monitoring wells before you even owned the site and had them out there for as long as possible so that you can actually understand what's happening there. They want to know that when construction is performed, you're going to get X amount of credits, but you also need to make sure that those credits stay there, right? You need to ensure that the process is not just offsetting short-term impacts to the landscape, but is going to be long-lived and is going to work for a very long time. And then finally, the business perspective, right? So like, how much money are you going to spend on this thing? Is it within budget? Is it on schedule? And kind of clearly defining what the actual purpose of the project is and using that as the North Star to guide things so that you don't go off track and go on some wild goose chase of trying to make a site do something that it doesn't want to do. Okay, so after all of that is said and done, then we kind of get into this real world construction, right? We've got the design in hand. We have vetted various construction firms. We have looked at, pricing for construction and interviewed contractors who do construction. And then you start getting into these construction windows and overall implementation factors. And so there's a few huge things that come into construction windows. There's a lot of moving parts. And so the big things that come into our project execution on the ground are seasonal restrictions. So working up north, we have projects in Montana and Idaho. Idaho near Boise is a little less of a huge deal, but over near Idaho Falls and into Montana, winter can be a huge issue. And then wildlife restrictions can also be a very big issue, whether it's elk rut or fish spawning, impacting in-stream activities or nesting eagles in the area. Those are just a few things that pop into mind that are kind of key. Getting all your permits in line. There's a bunch of permits that go above and beyond just getting the go ahead from the Army Corps and the IRT. You have to get county permits. You may have to get city permits depending on where you're located. And this can take, upwards of 2 years for all of this to shake out. So it's not unusual for this to take 2 years from time of inception to getting on the ground to actually putting a project on the ground. And I'm going to skip over a couple of these so we can get to questions because I think they're a little bit redundant. I would say the monitoring and the long-term management are two pretty key issues where I think I've already kind of covered this. You have to be on the site monitoring and maintaining it, especially in those first few years. That is critical to the success of the site. And the long-term management, pulling from that endowment over time, making sure that the endowment is fully funded and making sure that the money that's in there is going to work for the site. Otherwise, you just have to add more money to it. And usually financial folks don't love that. So, and then some common issues just to wrap up. Trash and trespass are like unbelievably common. You would not believe how common this is to see like a boat dumped by the side of the road on your property or see a game camera with a bunch of people out there hunting that you don't know. So that's why it's important to not be an absentee landowner, to stay on top of what's going on your site and to visit it a lot and to utilize it. And I don't think we need that slide. So I'm going to go to questions. I'm going to stop sharing my screen. And if you all have questions, I would love to hear them. And I guess I can open the chat.
I have a question.
Yeah.
This is my first time hearing about the mitigation banking, so it's actually pretty interesting, and I like the benefits that you outlined. But I'm curious, is there a negative public perception on these projects? Like, I don't know if I recall this when I seen it because it was catchy, but it was like a pay to pollute system.
Mm-hmm.
Is that like a noticeable pushback, or is that just like a one-time thing I might have read negative?
I think is this Rebecca? I'm
Yes.
assuming. Okay, your picture's on the screen, so I assumed it was you. I think that's a great question. That is absolutely something that we kind of deal with. As I mentioned, we do kind of straddle this interesting line where our products and our projects do allow development to go forward and to impact things, right? I think the way I like to think about it, though, is the U.S. is actually fairly unique in that we do regulate our wetlands much more stringently than like a place like Canada, for example, which is a little bit surprising to me, at least, and maybe surprising to some of you. We require people to offset their impacts. And there are times where a wetland impact, I would say about 90% of the time, the wetland impacts that we are selling credits to offset are pretty poor quality wetlands. A lot of times it's like a ditch near a Hardee's or something like that, right? It doesn't have like great ecological value, but it does key out as a wetland to the Army Corps, and then the Army Corps makes that entity go and mitigate at our mitigation bank, which I think is very high quality, and I think the Army Corps would say is high quality as well. So oftentimes you are offsetting I would say, a lower ecological quality wetland with a higher ecological quality wetland, and it becomes a little bit of a flywheel in that allows us then to go out and do other projects, right? It provides us more capital to do other projects. That said, there are times where a sensitive area is being impacted and there's really no way to stop it, I guess, because the Army Corps is going to approve the permit regardless, and they're just going to make them mitigate somehow or another. So yes, there is a little bit of a conflict there. I would say typically, though, the mitigation bank does provide a higher quality mitigation output than what is existing there.
Thank you.
It's great. As I say, there's a comment that came in from Tambra in the chat. If I maybe jump to that, and then we invite folks that are in classrooms to chime in if you have anything that you want to ask. So I'll just briefly say Tambra's comment is sort of a good neighbor question, which is regarding neighboring land use practices. How do mitigation banks ensure the success of ecological services in perpetuity? For example, ensuring noxious weed species do not reseed the bank site. Do you work with adjacent landowners to educate them on things like noxious species removal, eradication, management? So it's, yeah, basically, how do you deal with the neighbors?
Delicately is the answer. Neighbors can be pretty finicky. So we try to be a good neighbor by typically not actually telling our neighbors what to do with their land, and we expect the same out of them because a lot of times they are a little bit perplexed, I would say, that we're developing a wetland restoration project next to their land. I kind of find that astounding, but to each their own. So some people want to see stuff in agriculture forever, and there's a lot of people like that. To more directly to your point, we we try to locate our projects where they will have some sort of continuity or connectivity with other natural open spaces, whether that's adjacent to like a state park or state land, right? Or federal land, even. If there's some sort of continuity there, rather than it just being kind of a postage stamp, we would rather that all day, every day, than it just kind of being on its own. So we can't always do that. Land is bizarre and different in the US than anywhere else in the world, in that you have private ownership everywhere, and private owners have a ton of land rights and a ton of rights. So we do kind of have to balance that. I would say a lot of times it's kind of a delicate balance. There are times though where we may have an absentee landowner next to us that we would just make an offer on, especially if they are kind of a problem and we want to make the problem go away. Sometimes we can add that as like a bolt on if we'll kind of financially pencil.
All right. I was going to just see if there's any questions in Boise or in this room.
Yeah, I have a question.
Sure.
So what's the typical like cutoff for like getting credits? So for example, can there still be credits for a site 50 years, 100 years, forever after it's been constructed, or is it like after a certain amount of years, no more credits for this site because it's already done its part?
Once the credits are released, and the Army Corps determines whether or not they've been released, right, based on the performance of the site. If it's meeting its criteria, they'll release the credits. If it's not, they won't release the credits. Once the credits are released, though, they're there forever. So they can be drawn on forever, so long as the bank has not been terminated. And sometimes, like a bank might just financially not be going great, so a banker might close the bank. It would still have the long-term management funds associated with it, and it would still have a long-term manager associated with it. but they may just not be selling credits, in which case, like the credit just kind of evaporates, but the land and the project is still there.
Well, we got questions flooding in. Kendra had one.
Mine is kind of a big picture one, but a lot of what you talked today seems like you're balancing a lot of both scientific decision support, agency requirements, and also like land users and like acceptability. And I'm just curious if you have any advice on how to navigate balancing so many conflicting components that are going into it.
Good question. Yeah, the word there is stakeholders, and it's everyone's least favorite word. So, no, so like stakeholders are really hard, right? Because you can do your damnedest to put a project that you're very passionate in front of people, and they may not like it. And that's just the way it goes. I think it's very key to navigating stakeholders to understand your audience, right? Like you're not a lot of times you're not talking to all these people at the same time, so you need to understand like what you want to actually message people, and be very, I would say, thoughtful in your messaging to folks. I think if you actually believe in your heart that you're putting a good project on the ground, you'll be able to do that because you'll be able to assuage people's concerns.
All right. There's 4 that came in the chat. I don't know if you can see those well.
Yeah.
But yeah, we can maybe start with the first one, which is after an entity purchases a credit, are there any regulations that they have to make sure the land is still functioning as a wetland?
After the credit is purchased, so the credit is released. Yeah, there is a bit. This is from Anna. Anna, there is no requirement for the entity who purchased the credit. The mitigation bank, though, if they don't meet their continuing requirements, they wouldn't be able to sell any more credits. That's kind of the regulatory hook that they have, is basically saying, well, we've only released 20 of your credits so far, and you wanted 50, and you said you were going to get 50 credits. So we're going to withhold those credits until you get this thing up to snuff. That's kind of their hook. Toward the end, they have less of a hook. But if you want to go out and this is such a niche industry. Like if you want to go out and do more business and you have a bunch of failing projects, no one's going to approve your projects. So that's kind of the way it works.
That was actually a perfect segue into the next question, which is, what are the success rates for newly created mitigation bank wetlands versus pre-existing that have been restored or enhanced?
Created wetlands versus restored. I don't know off the top of my head, but Westervelt, for example, does not. I don't think we have any projects with created wetlands. We might have 1 or 2 out of like 45 plus projects, and it's not all created. There might be like a segment of the project that is going to be created just because of like some design constraints or whatever. We try not to create wetlands just because they typically don't work very well. That's kind of the short answer for it.
All right. The third one down, I guess, or maybe fourth in the comments, which is for civil and reclamation contractors interested in being more involved in wetland mitigation projects, what are the most effective pathways for engagements or engagement? So yeah, do they typically develop through proposal partnerships, sponsorships, or financial stakeholders like bankers? And are they usually structured as competitive bids or more relationship driven?
So a lot of times, the way we work is in this kind of space where civil and reclamation contractors, we will use them for actually executing our projects on the ground, right? So actually building out the projects, doing the seeding, doing the vegetation, doing some of the management options or management things. With us, we do usually have. Typically, we would take at minimum 4 bids on a project just so we can see what the different bids look like. Are our assumptions in line with what the bids are presenting, so on and so forth. We are a fairly small industry. There's probably like 6 big mitigation bankers in the US. So it just kind of depends on where you are, where you're mobilizing from. But we try to use fairly local folks for our projects to build.
Right. Getting close to time, but yeah, if you don't mind going through the next couple, we can stick around a little bit longer.
Yeah,
Um,
I can answer that one. So, number of credits, how are those determined? Usually it's a ratio. So, you get more credits for reestablished wetlands than you do for enhanced wetlands because you're going out and you're actually building something, right? You're excavating. They give you more credit for that. So, a reestablished wetland, they might give you 1 credit for every acre. An enhanced area, they might only give you 1/4 of a credit for 1 acre, right? So there's a value equation that you kind of have to get into and some calculus there of like how much land am I using, how much do I want to spend on construction, so on and so forth.
these questions segue really nicely, actually. The next one is also, do you ever combine habitat restoration credits with carbon credits?
We do not. We do not do carbon credits, and credits in general cannot be stacked. And what I mean by that is, so you could, okay, I take that back. You can stack credits, so you could have a habitat credit and a wetland credit, but once one of those is sold, it's gone, right? So if you think about a piece of land being checkerboarded with 1 acre credits, and one of the credits in the very southwest corner is sold for habitat, that goes away. You can't sell it for wetlands now, if that makes sense. And because of that, carbon doesn't work because carbon is way too cheap, and you would just be throwing money away on the carbon credit.
And then there's another really good one, which is the last one, and I figured we had to probably shut down after this one. But basically, there's a question about for restoration projects that are basically designed to improve habitat for ESA listed species. Basically, they don't tend to be connected to mitigation banks. So, are there opportunities to increase funding and adaptive management for future habitat restoration projects by tying them to mitigation banking framework? And what would be the roadmap?
Potentially. So this kind of built on that last comment. So we have dealt with stacked credits in the past where you go through both Fish and Wildlife Service for ESA listed species credits and wetland credits at the same time. The issue for us becomes kind of two key things. First, it takes a long time. Stakeholders, right? More stakeholders, more time. That's a tale as old as time. The second thing is endangered species regulatory framework is not as, I would say, thorough or robust as the 404 framework. So there are a lot of species banks that sit out there where they build it, the Fish and Wildlife Service says they need it, and then they don't actually make the entities who are making impacts buy credits from them. And that has been a thing that has occurred throughout the US in mass. The exception to that rule is California because their state regulations are so stringent that it almost circumvents or overrides the Endangered Species Act in that respect.
All right. Well, Will, I want to say thanks again. Really super interesting. Again, completely new material, I think, for a lot of us. So really appreciate you taking the time.
Absolutely. Thank you all. I hope you reach out to me if you have any questions. I think my email should be somewhere in this thing. So, and Tim could get it to you if you don't have access to it, but would love to chat with you all about it. We've got 2 projects in Idaho. So if anyone wants to come out and see one, let me know and I'd be happy to meet you out at the site, show you around.
All right. Great, thanks. And again, yeah, if anybody else needs help getting in contact, we can definitely facilitate that.
Excellent. Thanks, Tim. Thanks, everyone. Have a good day. All right.
Alrighty. Great.
Bye.
Thanks all. Bye-bye.